Okay,
All
go right ahead.
right. Okay, so Dave Ogburn, I'm with Bank New York Mellon in San Francisco, although I live out here in the East Bay, where I know most, if not all of you are currently, unless you're scattered to different parts of the state or the US or wherever, because you're all remote now, remote learning. So this is a virtual background behind me. This is actually our lobby at our, I think it's 270 Park office in New York, which actually sits right above Grand Central Station. So that's my official work virtual background. I've been at Bank New York Mellon for just over a year and a half. And prior to that, I was at JP Morgan in the private bank for the better part of 7 years, over 7 years. So I started my career just, I was in the military first, came out of the military, went back to get a master's in business from the Wharton School at the University of Pennsylvania. For me, that was something that I always wanted to do. In fact, I was pursuing an MBA part-time at night, but just wasn't going to complete it. And I said, if I'm going to do this right, I'm going to dedicate 2 years and go back and do this full time. I also thought it was a great way to transition from the military because it would give me such a wide view of different parts of the economy and different potential career paths, right, to consider. And it was just that it was great. So I initially thought I wanted to go into consulting, and I did it in between my first and second year of business school and found it wasn't for me. I actually also had another internship that summer where I sat on a institutional equity trading desk and just found that was much more suited for my nature. It was much more fast paced and, call it operational as opposed to consulting, which was just in my mind, interesting and engaging intellectually, but not, didn't offer the same kind of hands-on transactional nature to it. So I ended up going to work initially, for what was then a pretty large and well-known investment bank on Wall Street called DLJ, Donaldson, Lufkin, and Jenrette, on their institutional side of their business and what was called institutional equity sales. We ultimately got bought by Credit Suisse at the top of the dot-com boom, back in 2000. And then I, at one point in my career, to make things shorter here, transitioned from what was the institutional side of the business to the wealth management part of the business, which I've been in since. So, for your purposes, I bring a great vantage point because I have that experience of having worked on the institutional side where our clients were some of the world's largest hedge funds, some of the world's largest pension funds and mutual funds. And my clients were portfolio managers and analysts who managed people's money every day, and then made the transition to wealth management, where my clients now are individuals, families, for our larger clients, family offices that they've established, and then also endowments and foundations. So I'm still working with people who take a very institutional approach to the way they manage their wealth. It's just a different type of client. And that's what I've been doing since I made that transition. I like to say that we advise our clients on every aspect about their financial lives, right? And really their wealth or their finances are means to other ends. So it's really understanding what they want to accomplish in life and what they want their wealth to do for them. And that's what's really gratifying, is just really having that impact on people and their lives and bringing them advice that they truly value and truly take to heart. So is that enough of a background or introduction?
Yeah, Mr. Ogburn, I think that's really good background. I think everyone here finds it really fascinating how you've, kind of went from the military to institutional investing to consulting and then went through business school as well. And now you're on the more on the client side. But that kind of like goals still stay the same in terms of what you're kind of working with, because they still act at that institutional kind of capacity. So yeah, I guess we'll start our questions now. So I have the first question, and my question is, what is it like working at a large investment bank like JP Morgan?
Yeah, so I'm still at a large firm because we're actually the largest custodial bank, if not, on a global scale, certainly we're one of the largest, and we custody assets now for some of the world's largest institutions. Then I mentioned family offices and even our wealth management clients. So I've been at big firms, uh, I've been at small firms, I've been at medium-sized firms. For a firm like JP Morgan or Goldman Sachs or BNY Mellon or Credit Suisse or Citigroup or any of those firms, I'd say first and foremost, they're great places to start. If I think of you and think of where you are in your lives, obviously you're just in high school, but you guys are learning a lot now. What I oftentimes tell students who are coming out of college, those are great places to start, right? Because it's great to get those names on your resume just from a credentialing standpoint, but also you're just going to be exposed to so much more. You're going to be in formal training programs. Oftentimes they're rotational programs where you get to spend time in different parts of the firm or different parts of a business unit at those firms. JP Morgan, for instance, just to use them as an example, because I was at that firm, they have a very structured summer internship program between your junior and senior year of college. And that's oftentimes where they hire, the majority, if not most of their full-time analysts coming into the firm at the end of the summer. So provided you do a good job over the summer and there's a fit there in terms of your skill set and what they're looking for the role, you'll oftentimes get an offer at the end of that summer and have the opportunity to accept and then go back full time, or if you choose to, you want to look around at other firms or other professions, you're open to do that as well. So it's a great place to start. For instance, I started in institutional equities, and I got to see every function of the firm because we interacted with investment banking, we interacted with capital markets desk, we interacted, with research, the derivatives desk, program trading, convertibles, all different functions of an investment bank. Not to mention the fact that I got to see, the investment management world, right? Because institutional investors were my clients. And as an equity research salesperson, which I was, because you're working with all these analysts who are covering different companies and different sectors all throughout the economy, it was a great wide angle to understand all these different parts of the market, all the different functions of an investment bank and how financial markets work, how the stock market in particular works, and then understanding what are the dynamics of each of these industries and the sectors and the participants in the sectors. What are the competitive dynamics and what are the commonalities, right? How do you analyze a software company versus how do you analyze a paper and forest products company?
Yeah, I think that's like really, really valuable, especially for a lot of us here who are interested in going down that career path. That investment banking kind of serves as like a really good introduction to the entire like world of like finance and investments. So kind of going off that, or not going off that, but I think Matthew has a question that's related to your work that you mentioned earlier about social change and with NGOs, which we know you have a lot of history with.
Right.
Yeah. So
In
go ahead,
finance,
Matt.
sorry about that. Your career in finance is very intriguing. Now you mentioned that advising clients on their philanthropy and community engagement is sort of a personal passion of yours. Now I know you touched a bit on your passion for it, but in your introduction. But my question is, what is your inspiration for social change and NGOs stem from?
I think it's just my personal values, right? That were either instilled in me as I grew up or that I developed throughout my life. I always say that, there's that saying, if you love what you do, you never work a day in your life. But I use this model where I say, okay, you take what you're good at, right? Your skill set, and there's things you may naturally have an affinity toward because you're good at it, right? Some of you may be good at math, some of you may be good at writing, some of you may be good at speaking. You know, I could never be in the PGA because I'm not a good golfer, right? But you may be passionate about golf, right? But you have to combine that with your strengths. So I say combine your passion with your power, which are your strengths. And then it's like a Venn diagram of then what's your purpose, right? When you can find that intersection between all those three things, you've got it made because you're passionate about what you do. You're good at it, right? You're in the zone. And then thirdly, you really know to yourself that you're doing something that's purposeful for others and for the world. So that's really where it stems from. And I like to say I get the best of both worlds because I get to help good people do good, whether it's now individuals and families who are philanthropic and want to give back. And that's a big part of who they are. And then also helping nonprofits create a more sustainable world, you know, whatever their mission is, sustain their mission and have maximum impact.
Yeah, that's really important. I think everyone here should really realize that you don't have to just go by based on your strengths. Like you said, like you may be good at golf, but if you like, and you may be good enough to go on the PGA Tour, for example, but you also have to combine some of your values and kind of weave that into your strengths, like you said, and kind of find that purpose. And that's especially important for high schoolers and college students who, you know, as we grow older, we have to find, or that's kind of like our dilemma, right? Finding our purpose. What do we want to do? I think that's really helpful advice in terms of how to start that process. So now I believe Keshav has a question related to savings as a high schooler. So Keshav, if you want to ask your question, you can unmute and go for it.
Hi. So I have a question. So as a high schooler, do you think it's an appropriate time to consider starting a savings, like even without a steady income or like an actual employer? Or in other words, is whatever money like a high schooler can earn like at their like during their position significant enough to save for the future, or like would it not matter enough? Like does every penny matter, or can we just like use it on like what we would feel comfort in like at the current moment?
Yeah, Keshav, I would encourage you to start saving and investing, right? And again, these are just my personal views, you know, nothing related to my company at all. But, you know, when I first became passionate about investing, it was in high school, being involved. Actually, for us, it was just a class we took in high school around economics. But, you know, that's why I'm so encouraged and so glad to see all of you forming this club together. Because that's where my passion grew, was in high school. And I was just that person who always followed the stock markets and wanted to follow the stock markets and read as much as I could about it and started investing early. And, you know, there's a difference between investing and speculating, of course. But I think that ability to invest, right, and invest for the long term is more accessible to you and to all of you than it ever has been before, right? I mean, you can invest in ways that I couldn't invest in back then, right? Or didn't have access to, but it's, you know, the financial world has become so much more democratized, right? That it's opened up a whole new world for you. So, you know, I think it's a question of, you know, one, how much risk do you want to take? What's your time horizon? You know, or are you saving something for a purpose that is 1 year away or 2 years away or 3 years away? Are you going to use it to pay for college, in which case you don't want to take on undue risk with that money? But if it's like, hey, this is extra money, and you know, maybe I want to save it for buying a house 10 years from now on, or paying for graduate school, or you know, whatever purpose, then you have a longer term horizon so you can invest it accordingly. But those are some of the things I think I would think about if I were you. But no time better than the present, because the bottom line is it's time value of money, right? And I think it was Einstein or somebody said one of the best laws of the universe is the law of compounding. So the earlier your money starts to work for you, the better.
Hey, Rodoc. We
Yes,
have a
Kat?
follow-up question from the crowd.
Okay.
So, Dion, do you want to ask your question about savings?
Yeah, so you said to invest your money, and so would it be better to put it in a savings account or to invest it through a brokerage, maybe into an ETF or a stock in the market?
Yeah, I think again, that's somewhat of a purpose of, first, what's the money for, right? What am I going to use it for? When am I going to use it? Because those are all factors into how you invest it, right? Or whether you invest it at all. Unfortunately, in the low interest rate environment that we are currently, there's not a lot of return in cash or cash equivalent investments, right? So if you're going to be using it for some short-term purposes, I would urge you not to put the money at risk or any undue risk. But if you have a longer time frame, I would encourage you to consider investing. Again, this is Warren Buffett. I'm just paraphrasing, but he will tell. You've probably read. He said before, the only way to surely lose money is to keep your money in cash because of inflation, right? And so in most cases today, even most income producing instruments are producing yields that are so low, when you subtract inflation, you're actually getting negative yields.
Yeah, so speaking on that, I was a little bit curious about how if currently in the economy, there's not a very high yield on personal savings, right? So
Right.
I guess how would you convince your clients to continue investing in that?
I think our clients understand that you have to take on a level of risk, but not undue risk, in order to attain a return, right? I mean, it's typically higher risk, higher return is the general equation. For our clients, it's a spectrum, right? Because they will have cash, because they do have day-to-day cash needs, they have short-term cash needs, and they want to make sure they don't end up in a situation where they don't have that cash, right? Where there's any kind of a liquidity crunch, where, now I have to sell investments in an inopportune time, maybe even a distressed fashion, in order to raise capital. So, that they will have some amount allocated to capital, but also recognize that there's not going to be a lot of ways to produce income on that cash. And it's frustrating, right? It's frustrating as much to, an individual investor as it is to an institutional investor. And then, it's a spectrum from there to, okay, well, how much of your portfolio should be in income producing securities that play a twofold purpose, right? They produce income, but then they also act as a ballast to volatility in other investments, right? They're uncorrelated to, let's say, the stock market, just to use that as an example. And then they'll have investments in the stock market, in the publicly traded equity markets. And then for a lot of our clients, they'll have private investments, either investments they're making on their own in private companies, or money we might allocate for them to private equity, whether it's traditional private equity or venture growth equity. And the purpose of those in that spectrum, right, in that broad portfolio or asset allocation, depends on the strategy, but it's primarily to produce returns that, again, are uncorrelated to stocks and bonds, right? So when stocks zig, these don't zig, or they may even zag. You see what I mean? And same thing with the bonds and the stocks too, where typically if stocks go down, bonds will hold their price, maintain their price, or might even go up in price. So they're either uncorrelated, there's very little correlation, no correlation, or maybe even there might even be an inverse correlation across asset classes and investments.
Yeah, I think something that's really important for everyone to know is that stocks and bonds aren't the only forms of investing your money. that there are other financial assets that you can look into, and especially private equity. There's a lot of money to be made there, here in Silicon Valley especially. So now I believe Gavin has a question about some advice for high schoolers. So Gavin.
Yeah. So as you may know, almost every one of us in the investment club has an interest in finance. And since you're so experienced in the industry, do you have any advice for us who have an passion in finance to pursue the career in the industry? And another question is, what are some very important qualities that financial companies value in their employees?
Yeah, that's a great question. And, it's hard to generalize because, there's no one set thing that employers are looking for. I would say that, first of all, if you're interested in finance, learn as much as you can, right? Just be a sponge. Like I said, I was passionate about it. So I read everything I could. I asked people in the profession everything I could, met as many people as I could, just to learn as much as possible and find out where I fit in that. I think, secondly, you're going to find out whether or not you have the passion or the interest in it. Because to our conversation earlier, I know friends who went into investment banking thinking that it was one thing and then finding out or learning that it wasn't. And they made a career change, right? They were like, this isn't what I thought it was going to be. And some didn't. I have some friends who lasted. I have some friends who are still in investment banking today, right? And then I have other friends who went from investment banking into private equity or venture capital or into, corporate role or even a consulting role. So they've changed roles and changed professions. Then I have other friends who left investment banking very early on, realizing that it wasn't for them, whether it was the lifestyle or they just didn't feel engaged or passionate about the work. As far as, what employers look for, like I said, it's hard to really generalize. I think, surprisingly, maybe I'm different in my point of view on this. If you want to go into something like investment banking, there's certain skill sets that you're going to want to develop, right? In terms of maybe your Excel modeling skills and, some of your finance, just kind of core skill set, right? But where I may differ also is that employers are also going to look at your soft skills, right? Can you work with everybody else as a team? How do you collaborate with others? Because everything is so team-based. And, are you the type of person that works well with others? Are you the type of person who can handle adversity? Are you the type of person who can meet challenges? Can you prioritize your time? Can you prioritize importance of different tasks? And just critical thinking. I mean, some of the most successful people I've seen in our industry that I've worked with or have worked for aren't necessarily people who are finance oriented, whether by education or by function. They're just good critical thinkers. And that's oftentimes more important than just the hard skills, because your employer can teach you, hey, here's our model and here's how we want you to value this company, or here's how we want you to structure this deal, or things like that. You can learn all that, you can be taught all that, but it's a lot of the intangible soft skills that I would just urge you all, don't neglect the importance of those.
No, that's great advice, because I think a lot of us rush headlong into like the information side of it instead of thinking about the skills, I guess, that we need to build to that point. But I did get a couple questions from the crowd about any books or any kind of news sites that you would recommend to people like us or anyone in general.
I should have come with a prepared list. God, there's so many great investing books. One that I'm partial to, because he was one of my professors at Wharton, is Stocks for the Long Run by Jeremy Siegel. And he's had multiple editions and multiple books. Anything by Warren Buffett a lot of just classic investors read they can't wait for his shareholder letter every year that he writes, and there's books that actually publish those. Of course, Ben Graham was the father of value investing, which who taught Warren Buffett how to invest. Michael Lewis has some books, from his time on Wall Street, and kind of being in the deal making side of things. I can actually circle back with you guys with maybe a more extensive list. You mentioned personal finance. There's a lot of books written, obviously, on personal finance, and just I think that's so helpful in life for all of you, whether or not you end up pursuing careers in finance, is just learning as much as you can about how to manage your own wealth, right? And the things you can do from a personal finance standpoint, just starting with a budget. I mean, there's so many people who don't even know how much they make out there versus how much they spend and where it's all going to, and don't really have a plan or a strategy. If you're an endowment or foundation, you have an investment policy, but you also have a spending policy. And so even for individuals and families, that could go a long way to have an investment policy, but also a spending policy.
No, yeah, that's a great list already. If you would like, you can go ahead and send us a list after we follow up. But I think our audience has quite a list of resources to look at now. So thank you. I did want to talk a little bit about our club, which has a sort of spin-off blog about personal finance, because we realized that obviously finance is kind of complex. It's not the easiest thing to learn, but we do think that everyone should at least learn the basics, like what you were talking about with just having a plan, leaving college and everything. So we talk a lot about like personal finance on this site. It's called streetfins.com, and I'll send it to you after the meeting. But we also have this sort of podcast that goes along with it, where we basically just interview people about different financial topics or current events. And so they come from all walks of life. And it's definitely something that I think has made me learn a lot more about personal finance and just finance in general. But thank you for the resources that you provided.
Yeah.
I'll hit it off.
I was going to say one thing that might be helpful as a perspective to think about for yourself, right? For all of you is, think about yourself as an enterprise, right? You are your own best investment because you're going to be producing income throughout your lifetime, right? And you're going to be, your asset is going to grow in value over time. So what can you do from a not only financial standpoint, but educational standpoint to make sure that you keep improving your enterprise value?
Yeah, that's Mr. Ogburn. That's really helpful advice. All of what you said. I also wanted to bring up that a lot of the books that you mentioned, including Stocks for the Long Run, I actually own like a copy of that.
There you go.
Like about 5 or 6 Michael Lewis books, which I highly recommend to everyone. It's a very good introductory books. Anyways, so my question was, as a college student, what is the best way to gain experience with private equity and investment banking?
Yeah. So, like I said, it's only one path, but the major investment banks have pretty formal recruiting processes and programs that are very structured. So that's one avenue. Private equity less so, just because they don't have as structured of programs for undergraduates, because they hire a lot of people out of the investment banks, right? So they're already hiring people who have experience who they don't necessarily need to train. So that might require, I would say, at least, more of a kind of, you need to supplement maybe a formal job search through your career center at whatever school you go to, with an individual job search where, if those are the type of roles or positions you want to look for, that, that you're doing a lot of that legwork on your own, because they're not necessarily the ones who are coming to campus in the same number and in the same frequency as some of the actual investment banks are. And then don't rule out a small boutique firm too, because not everybody you might have better odds there, just because everybody is so focused on the big investment banks. And another area might be real estate too. There are actual investment banks that focus solely on real estate, or there's actual investment banks that focus on certain sectors, like they only work with food and beverage companies, or they only work with, name the sector, right? And then of course, in our area, so much of the ecosystem, we have a pretty, sizable private equity, traditional private equity footprint in the Bay Area, of course, but it's dwarfed by the venture capital ecosystem. So, right here certainly is a great, great area to look for something.
Yeah, I think that's really helpful advice, especially because, like Gavin said earlier, everyone here is really interested in going in a career in finance, I believe. So there's multiple avenues for you guys. No need to worry if you don't get that big internship at Goldman Sachs or JP Morgan. So now
Exactly.
I believe Derry has a really interesting question about finance in general.
Yeah. So I was just kind of thinking when I was coming up with this question, it was like finance. I think when people generally look at it, like the average person thinks a lot about wealthy bankers or the government or, like basically a lot of wealth condensed into a single place. But at the same time, like people in our generation, like younger people, are very concerned with social justice movements and kind of, uplifting the the more impoverished and less privileged. Do you think there are any ways that finance could be or already has been opened up as a tool to like help people who are more socioeconomically like underprivileged?
Yeah, absolutely. I think there's a great need for that, and there's companies that are addressing that. There's financial services companies that are doing that, social enterprises that are doing that. I love it because I feel like there is unequal access to advice and to services. I love to see that that's only improving more and more, not only just on a national level, but a global level. So I think that's the thing. Finance can be used as a tool for that in a positive way, right? I think a lot of people, like you said, associate finance with only being something that's a benefit to the wealthy, just like, people have a certain stereotype about people who are in finance, right? And like you said, the stereotypical banker. But finance is actually, there's another book you can read. It's by, God, I forgot his name, but talks about finance as being a noble profession because you can help people with your advice and your services. That's what's most gratifying to me, like I said earlier, is seeing the impact. It's very different when on the institutional side, it was a very kind of B2B relationship, right? Business to business, and it was fiduciary to fiduciary, sophisticated investor to sophisticated investor. Whereas on the wealth management side, it's kind of more B2C, right? Where somebody may come to you who doesn't have the same level of financial sophistication or financial understanding of things. They may be a great entrepreneur, built a huge company, everything else, but not necessarily understand financial markets or investing. And it's the ability to help people on a more personal level that's so gratifying to me. It's helping individuals, families who really value the advice because you're helping them in a way that they truly value. And then same thing, for nonprofits, right? You're helping them because you're helping them be a sustainable organization and having the impact that they have in the community on a much larger scale. I don't know if that directly answers your question, but hopefully it helped.
Yeah, I think that's really, really good perspective on finance as a tool for social change. So now I believe Safe has a question about networking. So Safe, if you want to go ask it, go for it.
Yeah. So my question was, how has networking aided you in your success? And what advice would you give to young students who see networking as part of their future?
Okay, I think I heard that. Like, how has networking helped me, and what advice would I give to somebody like you all as far as networking? Was that more or less the question? I'm sorry, I couldn't hear. I think I might have been losing my signal. Does that sound like it was
Yeah.
more or less the question? Okay, yeah. So networking is
Yeah, that was it.
extremely. Go ahead. Yeah, I was going to say networking. Can you guys hear me? Okay.
Yeah, we can hear you
Okay.
perfectly.
Okay. Networking is extremely important in business in general, right? And you know, it's something that is easier for others than for some than others. You know, if I took a look at this screen and, you know, if we did a survey, there might be some people who are more introverted here, some people are more extroverted. So, you know, it all kind of depends on how comfortable you are with that. But in general, I think it's helpful to network in business, whether it's to build up your own professional network or, you know, for business purposes. That said, you know, I mean, I think the most important aspect about it is that you be genuine and authentic, you know, when you are networking and when you're reaching out to people. And I would encourage you that, is networking important to you? You know, insofar as that you could reach out to people and learn more, I think that would be very valuable to all of you. I don't think you have to think, you know, at least at this point, about, oh, who should I network with to get this internship, to get this job and everything else. I mean, that's all down the road. And then secondly, you know, I guess to me, it's more important that you just reach out to people. Like I said, it's aligned with what I was saying before, that I think the value of networking to you now would be just learning as much as possible. The great thing is, again, there's tools that allow you to network even in a virtual world in a way that you couldn't, certainly in my generation, and, you know, even before COVID, right? You know, one thing I'd like to say, I thought of it with a few of these questions, including Matthew's, is that, you know, one of the things I'm so inspired and encouraged by is so many young people who are interested in social change. I love to hear these questions from you all, because you're all thinking about the impact you can have on the world. You know, whether you pursue a career in finance or not, you know, just thinking about the ways that you can impact the world, you know, the environment, society. And I just like to hear that's such an important aspect to you, and that it's so integrated in what you're thinking about as far as the future.
Yeah, that's totally true. A lot of us are really like inspired by a lot of these social movements and really seek to like make an impact, whether that be in society or in the environment. So going off that, I believe Colleen has a question related to your work with the Salvation Army.
Yeah, so I was reading your LinkedIn and it said that you were a board member of the Salvation Army. So I was just wondering, what work have you done with that position?
Yeah, so I got involved. So I chair the board of the Salvation Army of San Francisco, and then I also sit on their investment committee for, you know, what's called their Western region, so I can bring some of my professional expertise to bear. But, you know, I guess, again, it kind of gets back to my passion, that when I looked at volunteering and getting involved in the community, there were a few things I thought of first, which were, one, what's most important to me? And to me, you know, when I work in San Francisco and I see the homeless problem and the people who are living in the conditions they are, where in some cases are not even afforded basic human dignity, to me that was important, and that's where I said I wanted to focus my time, my volunteer time. There's no shortage of great causes, right, that people decide they want to invest their time in. But that was important to me, that I looked at it from an investment point of view, that where do I want to spend my time and invest my time? Secondly, I said, no matter where I invest my time, I want to see a big return on that, not to me, but in terms of the impact, right? And the ability to scale. And it's an organization that is big and it scales, has very low overhead, but could have a tremendous impact. I mean, for instance, just to give you a little background, we own more, we've been in San Francisco since 1872 or something like that, right after the gold rush, or kind of coincident with the gold rush. We own more properties in San Francisco than any other nonprofit. And we've been approached by constituents in the community, the government, the business community, nonprofit community, to say, hey, you guys have two things. One, you have programmatic expertise, and two, you have real estate. How can you be a part of the solution to help solve the problem that we have right now with lack of affordable housing and this homeless population that just continues to grow, because of which, lack of affordable housing is one of the big contributors. So we're actually going through a process right now on a strategic level where we're re-envisioning some of our properties to redevelop them in partnership with the nonprofit community, in partnership with the government, in partnership with the business community in San Francisco. And we think we can add upwards of 20% capacity to our programming around drug and alcohol addiction and workforce development to help people, get back on their feet and get off the streets, and then have stable housing after, so that they can get their feet under them. And we've been working with businesses on a pro bono basis. We've been working with the government. We've been working with other nonprofits, and we're at the point where we're kind of about to embark on that plan. And we think we could add upwards of 2,000 units to be able to do this in San Francisco. So that's a more specific example, but you could see the scale, right? 20% of what the existing capacity is in the city for programs like that. And so that was the other thing that was important to me when I decided how I was going to invest my time. And it's almost like choosing a finance career, right? You have to be passionate about, where you're making that investment.
Yeah.
Does that help, Colleen?
Yeah, I just thought it was interesting since some of us are seniors and we're working on our volunteer hours and like giving back to the community. So it's really cool to see you do that.
Oh, thank you. Yeah. And thank you for giving back to the community. I got involved in a way that a lot of people get involved with nonprofits, and it was going through that thought process and then just being introduced to the organization by somebody as well. So that's oftentimes how people kind of find themselves getting involved on a volunteer basis like that. And so I do some other volunteer work for them too, delivering meals on Thanksgiving, on Christmas. There's all different programs that they do, but what I was kind of mapping out for you was more at the executive level, the board level.
Yeah, I'll be honest, I had no idea that Salvation Army had such a large impact in San Francisco and was even approaching the housing crisis that was there. I find that like really interesting. And I also find it really cool how you talked about it in terms of like investing your time and seeing like, and kind of approaching like that aspect of your life through an investment mindset where you want to like kind of maximize your impact, not for you, but for the rest of the community, which is awesome.
Yeah. And then again, kind of that paradigm I gave before too, or what do I bring to the table, right? What are my strengths that could benefit the organization and their mission?
Yeah, absolutely. So now I believe Sahana has a question for you.
Yes, so I was wondering, as a high school student who is considering getting maybe a part-time job and building credit, I was wondering what is important to consider when deciding to build credit?
Great question. Thank you, by the way, for your question. I would just say it's a great idea to build credit and use credit wisely. We have a saying in our business, leverage cuts both ways. Leverage can, when used strategically can actually enhance returns. On the other hand, leverage can also create a situation where you become distressed, right? Whether it's as an individual or an institution. So I think in general, it's from a personal finance standpoint, a good idea to develop credit, but just remember to use that wisely, because there's so many people who get into holes that become so hard to dig out of when they, become overextended with credit, especially revolving credit, because the interest rates are so high. And so that compounding effect that I talked about before, that I think it was Einstein that talked about, also there's negative compounding.
Yeah, that's really good take on credit as in general. I believe Matt now has another question for you.
Yeah, so first of all, I just want to say thank you for all of your great advice on nonprofit work and social change. Believe it or not, many of the students here in the Bay Area are actually starting their own nonprofit. I feel like there's almost like a nonprofit starting like every few months. It's crazy. On another note, I don't know if you've seen like the recent news, but recently these amateur investors, perhaps propelled by a mix of greed and boredom, um, were looking to teach Wall Street a lesson, and they've actually come together and sort of uh, pushed the stock of GameStop almost up over 1,000%. So we've seen the dangers of these students starting out investing, amateur investing. My question is, what are some of the biggest mistakes that young investors make?
I would say the first one is confounding investing with speculating, because they're two very different things. And so realize when you're speculating that you're speculating and not telling yourself you're investing, right? When you're investing, that's very different from speculating. So that's one mistake. Two is, and I would say just in general, kind of a lack of diversification, right? Because you're oftentimes starting with such small amounts, it's hard to, really develop diversification. But I think those tools and those solutions to be able to do that are more common now than they ever were. I mean, you could buy fractional shares now. It doesn't take a lot to invest in a S&P 500 ETF, right? And just begin to start the building blocks. And then lastly, just take a step back. Investing is one aspect of personal finance, right? And we say there's 5 areas, right, that you want to focus on. One is investing, 2 is borrowing, 3 is spending, 4 is protecting, and 5 is managing, managing tax efficiency. And out of all those 5 things, actually the 4 that are not investing are going to have a bigger impact on your personal balance sheet than any returns typically you could get in investing. And why? Because, what's your burn rate? How much are you spending? The thing that you have most control over as an individual and are empowered to control most is your spending, right? You can control your longevity to a certain degree, right? You can take care of yourself and your health and wellness. That'll determine, at least in some part, your longevity. You can't control it completely, right? Because there's randomness. You can't control market returns, right? And market sentiment. So that's out of your control too. So what's the thing you're most empowered to control? One, the investment decisions you make, but even bigger impact is your spending, right? Because you can't even necessarily always control your top line. The one thing that investment advice that Warren Buffett always said was, the metaphor he gave was walking into a store, right? You don't have to buy anything that day. You could turn around and leave and come back another day when it's on sale. So the thing from an purely investment standpoint alone, that you can control the most is the price you pay for something. So that's another key lesson. You can't always control investor sentiment. You can't always control valuation changes. You can't always control market volatility, but you can control the decision of what you decide to pay for something.
Yeah, thank you. Thank you for the reminder that like it's a pretty crazy economy right now or in the past year. And I guess it's important to stay grounded that there are still things we can control over our lives and our money and our personal finance beyond just like investment. Because we are the investment club, but we do try to like talk about more than just stocks and bonds all the time or like ETFs and stuff. So yeah. Okay.
Well, Cassandra, I have to point out we're coming up on the hour, and I actually have a meeting I have to be at 4 o'clock. So maybe one last question that I can answer real quickly. And, you know, as I mentioned before, I'm more than happy, one, to follow up with some recommended reading, and two, if anybody has any questions, I'm more than happy to address those as well if we couldn't get to them today.
Yeah, perfect. We'll wrap it up with one final question. So Nigel, would you like to ask your question?
Yeah, my question is, what's one thing you learned during your career that changed your mindset or like changed the way you think about money?
That everybody has an emotional attachment to money. You can't separate your personal experience and your emotions with money. It's so hard for people to do. I mean, even with institutional investors, at the end of the day, they are human beings and they're shaped by their experience as much as any of us are. You know, I would say, again, getting back to what I was talking about before, at least on an institutional level, you know, it was very much kind of a B2B type of relationship. But when you're talking about somebody's wealth, it's very hard to extricate them from their feelings about money, right? Because you've watched your parents and seen how they save or spend money. You've watched your grandparents, maybe you've watched your peers, and you know, you've had your own experiences with money, and it's so unique to every individual.
Yeah. Okay, thank you so much for your time today, Mr. Ogburn, and I will follow up with you with an email if our members have any questions. But thank you so much for all the advice you gave us today, and have a nice day.
Well, thank you all for having me. And like I said, I'm so encouraged to hear your questions, and so grateful to be here, and you know, so excited too to see all you guys come together like this and form a club and share ideas and insights.
Yep. Thank you.
All right, take care, everybody.
You too.
Ronak, thank you for inviting me as well.